The message wasn't a rumor. It wasn't a bluff. It came directly from Kim Jong Un himself, and what he said has left the entire world completely silent. He didn't just threaten America. He told them exactly where his missiles can reach. Every city, every corner, every target. Already locked. And America still hasn't given the world a single answer. What happens next could change everything we thought we knew about the most dangerous standoff on the planet. Stay with me. Because what's coming next, you're not prepared for. Welcome to Currency Archives. Now, before we go any further, if you found your way here today, you're already asking the right questions. I want you to do something for me. Think of that one wise person in your life. Maybe a grandfather, an uncle, someone who's seen enough of this world to know when something is serious, they don't need to be told twice. Be that person. Hit that subscribe button. Not for me, but because the stories we cover here, you won't find them told like this anywhere else. And one more thing, drop a comment below and tell me, where in the world are you watching this from today? Because this story affects every single one of you, no matter where you are. Now, let's get into it. The room went quiet. Not the kind of quiet that follows a surprise announcement. Not the awkward silence of a press conference gone wrong. This was the silence of people who had heard something, and were not sure what to do with it. Kim Jong Un had just told the world something that most governments had privately known for years, but had never expected him to say out loud. North Korea's missiles could reach every corner of America, every city, every base, every target, and he said it without hesitation. For decades, the world had watched North Korea conduct missile test after missile test. Analysts wrote reports, governments issued statements, the United Nations passed resolutions, and every single time, the world moved on. The news cycle shifted, markets stabilized, and the Korean peninsula faded back into the background noise of global geopolitics. But this time was different. This was not a test. There was no missile launched into the Pacific Ocean. There was no radar signature to track or satellite image to analyze. This time, Kim Jong Un simply looked at the world and made a declaration. He told America directly. His weapons were ready. To understand why this moment matters, one must first understand the man delivering the message. Kim Jong Un is not a leader who speaks carelessly. Every statement released by the North Korean government is calculated, timed, and deliberately worded. Nothing leaves Pyongyang by accident. When Kim Jong Un says something publicly, it is because he wants a specific reaction from a specific audience. And this time, his audience was not just America. It was China. It was South Korea. It was Japan. It was every investor, every military planner, and every government official sitting in a quiet office somewhere trying to calculate what comes next. The statement was not emotional. It was strategic. North Korea's official framing described the missile capability as part of a national defense strategy, a deterrence tool designed to prevent aggression. On the surface, this sounds like standard military language, but beneath that language sits something far more significant. Deterrence only works when the other side believes the threat is real. Kim Jong Un was not just announcing a capability, he was announcing a credibility. For the business community, this distinction is everything. Markets do not move on emotions. They move on probabilities. And when a nuclear-armed state publicly declares that its weapons can strike the world's largest economy, the probability calculations of every risk manager, every portfolio strategist, and every supply chain director on the planet quietly shift. Not dramatically, not immediately, but they shift. Over the past decade, North Korea has conducted numerous long-range missile tests. Each test was analyzed, condemned, and eventually absorbed into the background of global risk assessments. Investors learned to treat Korean peninsula tensions as noise, recurring, manageable, and ultimately inconsequential to their bottom line. That assumption is now being challenged because what Kim Jong Un said this week was not a test. It was a status update. He was telling the world that the work was done, that the years of testing, the billions spent on weapons programs, the international isolation, the economic suffering of his own people, all of it had led to this moment. North Korea had arrived at the destination it had been building toward for over a decade, and America had no immediate answer. The Korean peninsula has always been one of the most closely watched regions on Earth. It sits at the intersection of four major powers: the United States, China, Russia, and Japan. What happens there does not stay there. It ripples outward into trade relationships, military alliances, energy markets, and investment strategies across the entire Asia-Pacific region. When Kim Jong Un speaks, the ripples begin immediately. The question that serious analysts are now asking is not whether North Korea has the capability it claims. Most intelligence assessments have quietly confirmed that for some time now. The real question is far more unsettling. If America knew this was coming, why does it look so unprepared? There's a question that almost nobody asks. Not the analysts, not the news anchors, not the government officials standing behind podiums delivering carefully worded statements about sanctions and diplomatic pressure. The question is simple. How does one of the poorest countries on Earth build one of the most advanced missile programs in the world? North Korea's GDP is smaller than the economy of a mid-sized American city. Its people face chronic food shortages. Its infrastructure is decades behind the rest of the developed world. By every conventional economic measure, this country should not be capable of what it has just announced. And yet, here we are. Kim Jong Un is not standing in front of a broken system. He is standing in front of a machine, a carefully engineered financial architecture that has been built, tested, and refined over decades, specifically to do one thing: fund the unthinkable. To understand how North Korea finances its weapons program, one must first abandon the assumption that sanctions work the way they are supposed to. The international community has spent years layering sanctions on North Korea: trade restrictions, banking prohibitions, energy embargoes, asset freezes. On paper, the pressure has been immense. In practice, Pyongyang found the gaps and walked straight through them. North Korea operates one of the most sophisticated sanction evasion networks ever constructed by a nation-state. It does not move money the way conventional economies do. It moves money the way a ghost moves through a building: present, purposeful, and almost entirely invisible to those looking in the wrong direction. Ship-to-ship transfers in international waters allow North Korean vessels to receive fuel and export coal without ever touching a sanctioned port. Shell companies registered across Southeast Asia, Africa, and the Middle East create layers of financial distance between Pyongyang and the transactions it depends on. Front businesses operating in China's border regions quietly process payments that never appear on any government ledger. And then there is the digital frontier. North Korea's cyber operations represent one of the most underreported economic stories of the past decade. State-sponsored hacking units, most notably the group widely referred to as Lazarus, have systematically targeted banks, cryptocurrency exchanges, and financial institutions across the world. Conservative estimates place North Korea's total cryptocurrency theft at well over $3 billion over the past several years alone. $3 billion. That is not petty theft. That is a national revenue strategy. For context, that figure rivals the annual foreign aid budgets of several mid-sized nations. It is enough to fund years of advanced weapons research, satellite development, and long-range missile testing. And it was stolen not through military force, but through lines of code written by young engineers sitting in rooms that the outside world cannot see. This is the economy behind the threat. This is the financial engine that Kim Jong Un has been quietly running while the world focused on his missile launches and ignored the bank accounts funding them. For the business community, this is where the story becomes deeply personal. Every major financial institution with digital infrastructure is a potential target. Every cryptocurrency exchange operating without robust security protocols is a potential revenue source for Pyongyang. Every company that dismisses North Korea as a distant geopolitical problem may already have contributed to its weapons program without ever knowing it. This is not speculation. It is documented. It is verified. And it is ongoing. The missile that Kim Jong Un just told the world can reach America was not built on patriotism alone. It was built on stolen funds, shadow networks, and the extraordinary ability of an isolated regime to extract resources from a global financial system that was never designed to keep it out. And here lies the most uncomfortable truth for serious decision makers. The sanctions failed. Not partially, not temporarily, structurally. The architecture designed to economically contain North Korea became the pressure that forced it to innovate. Every restriction pushed Pyongyang to find a more creative, more invisible, more dangerous way to generate revenue. And now that innovation is pointed directly at America, the weapon is built, the funding never stopped. Which raises a question that should concern every boardroom, every risk committee, and every investor with exposure to the Asia-Pacific region. If they built all of this without anyone stopping them, what else are they building right now? It always starts quietly, not with explosions, not with breaking news alerts flooding every screen simultaneously. Not with the dramatic imagery that Hollywood has spent decades training the world to expect from moments of global crisis. It starts with a number, a single index, a futures contract, a currency pair moving in the wrong direction at 3 a.m. when most of the world is still asleep. And by the time the average investor opens their eyes, the damage is already done. This is how geopolitical crises translate into economic reality, not all at once, not dramatically, but with the quiet, surgical precision of a market that processes fear faster than any human being ever could. Kim Jong Un's warning has entered that system now, and the dominoes are already in position. To understand what a US-North Korea escalation does to global markets, one must first understand what the Korean Peninsula actually represents in the architecture of the world economy. South Korea is not simply a country. It is a critical node in the global technology supply chain. It produces a significant share of the world's memory chips and display panels. Companies like Samsung and SK Hynix do not just serve the South Korean economy. They serve every smartphone manufacturer, every laptop producer, every data center operator on the planet. Japan sits directly in the escalation corridor. It hosts major U.S. military installations. Its export economy is deeply integrated with regional stability. The moment tensions on the Korean peninsula cross a certain threshold, Japanese markets respond with a speed and severity that reverberates across every connected financial system in Asia. And then there is Taiwan, sitting at the edge of this same regional geography, already carrying its own set of tensions, already embedded in the same semiconductor supply chains, already being watched by the same investors trying to calculate how much risk they can absorb before they need to move. One crisis in this region does not stay contained. It collides with every other pressure point already active in the system. History has already shown exactly what happens when the Korean peninsula destabilizes. During previous periods of acute tension, missile tests, nuclear declarations, military posturing, specific and measurable market patterns emerged with remarkable consistency. Gold moved. Every single time. Investors who understand fear do not wait for confirmation. They move toward hard assets the moment uncertainty crosses a certain threshold. Gold is not just a commodity in these moments. It is a measuring instrument for global anxiety. Oil spiked. The Korean peninsula sits at the center of some of the world's most critical maritime shipping lanes. Any credible military escalation in the region immediately triggers recalculations across energy markets. Supply chain managers, logistics operators, and energy traders all begin pricing in disruption before a single shot is fired. The Japanese yen strengthened. Paradoxically, the currency of a country sitting directly in the threat corridor becomes a safe haven during Asian regional crises. This is not logic. This is market behavior. And market behavior does not wait for logic to catch up. Regional equity markets dropped. South Korean stocks, Japanese indices, and broader Asian market benchmarks all moved downward during previous escalation cycles. The speed of those moves accelerated with each successive crisis as algorithmic trading systems became more sophisticated at detecting geopolitical triggers. Now apply all of those historical patterns to today's environment. The world economy is not entering this moment from a position of strength. Supply chains are still recalibrating from years of disruption. Inflation pressures remain active across multiple major economies. Interest rate environments have created fragility in debt markets that did not exist during previous Korean peninsula crises. The system is more interconnected, more leveraged, more sensitive to shock than it has been in decades. An escalation that might have caused a controlled market correction 10 years ago could trigger something significantly more severe today. This is not catastrophism. This is risk calibration. And China watches all of this very carefully, because China holds a position in this crisis that no other actor possesses. It is North Korea's primary economic lifeline. It is America's largest trading partner. It is the one power that could theoretically slow this escalation, and the one power with the most complex set of incentives for choosing not to. Every investor with Asia-Pacific exposure should be asking one question right now, not whether escalation is coming, but whether the financial system they are operating inside was ever built to survive it. Every crisis has a moment, a precise, identifiable point in time where the situation could have gone either way, where one decision, one conversation, one carefully chosen word could have pulled the world back from the edge. Most people only recognize that moment in hindsight. The serious decision makers, the ones who protect wealth, preserve businesses, and navigate uncertainty with precision, they learn to recognize it while it is still happening. That moment is right now. Kim Jong Un has made his declaration. The markets have begun their quiet recalibration. The governments involved are measuring their words carefully, and somewhere in the space between diplomacy and escalation, the next chapter of this story is being written. The question is not whether you are watching. The question is whether you are ready. There are three realistic scenarios that serious analysts are now mapping across boardrooms, risk committees, and intelligence briefings around the world. The first is controlled tension. In this scenario, Kim Jong Un's declaration functions exactly as intended, as a deterrence signal. America responds with measured diplomatic language. Back-channel communications remain open. The situation does not escalate militarily. Markets absorb the uncertainty, volatility spikes briefly, and the Korean peninsula returns to its familiar position as a managed risk rather than an active crisis. This is the most historically precedented outcome. It has played out multiple times over the past 2 decades, and precisely because it is familiar, it is the scenario that creates the most dangerous complacency. The second scenario is graduated escalation. In this scenario, America's response, or lack of response, is interpreted by Pyongyang as weakness. North Korea conducts a demonstrative missile test. Regional allies demand stronger U.S. commitment. Military assets begin repositioning. The diplomatic window narrows sharply. Markets move from managed volatility into genuine fear pricing. Supply chains that run through South Korea, Japan, and the broader Asia-Pacific corridor begin experiencing disruption that cannot be absorbed quietly. This scenario does not require a single shot to be fired. Economic damage begins the moment the market consensus shifts from "this will be managed" to "this might not be." The third scenario is the one that nobody in an official capacity is yet willing to discuss publicly. Full escalation, miscalculation. A military exchange, limited or otherwise, that transforms the Korean Peninsula from a geopolitical risk into an active conflict zone. In this scenario, the domino effect described in the previous chapter does not unfold gradually. It unfolds simultaneously. Semiconductor supply chains collapse overnight. Energy markets spike beyond any recent historical precedent. Safe haven assets absorb capital at a speed that destabilizes the very markets investors are trying to flee into. This scenario is not probable, but it is no longer theoretical. And the distance between improbable and impossible has been quietly shrinking. For businesses with Asia-Pacific exposure, the strategic actions required right now are specific and non-negotiable. Supply chain stress testing is no longer optional. Every organization dependent on components, manufacturing, or logistics running through South Korea, Japan, or Taiwan needs a clearly documented contingency plan, not a conceptual framework. A documented executable plan with identified alternative suppliers, rerouting protocols, and financial buffers already in place. Currency exposure must be reviewed immediately. The yen, the won, and regional currency pairs will move with speed and severity if the situation escalates. Organizations carrying unhedged exposure in these currencies are carrying risk that has not been properly priced into their current financial models. Energy cost assumptions must be revised. Any business operating with fixed energy cost projections built on current pricing is operating with a model that does not account for what a Korean Peninsula escalation does to oil markets. That model needs to be updated now, not after the spike. And then there is the diplomatic window. It is narrower than most governments are publicly acknowledging. What Kim Jong Un actually wants is not complicated. It is what every nuclear state ultimately wants: recognition, security guarantees, and economic relief. The architecture of a negotiated solution has been understood for years. What has prevented it is not the absence of a framework. It is the absence of political will on both sides to accept the compromises that framework requires. That window does not stay open indefinitely. Every week of inaction, every escalatory statement, every repositioned military asset makes the path back to diplomacy steeper and narrower. This is the crisis hiding behind every other headline. While markets watch inflation data, while investors track interest rate decisions, while the business world focuses on quarterly earnings and growth projections, this situation is developing in the background with a momentum that does not pause for convenient timing. Kim Jong Un did not warn America for entertainment. He warned America because he is ready. The real question, the one that every serious decision maker must now sit with in silence and answer honestly, is whether you are ready too.